Hi everyone, my name is Adam Harris from Trade with Precision and welcome to IC Markets Market Commentary. So let's have a look at the markets across the board. So first of all, we have Euro against the US dollar here. We are currently sitting in a downtrend, but we are sitting at a significant level of potential support. If we have a look at it, for example, from a monthly time frame, you can see that we're sitting within this area where we might well find support. We actually had a little bit of a bullish reaction last week, but it looks as though we're going to come back down and test that again. So hinting at this time a little bit more at least in the immediate term in euro dollar weakness and dollar strength. If we have a look at cable, so this is where it gets interesting to me. We've actually been stuck within a range going all the way back to December. We had a failed attempt to break outside of that range. We're now back within that range. In situations like this, almost always we work our way back up to the other side of the range. That is something that almost always happens. Doesn't have to, but there's a very high probability of that happening. But so at this time, it also kind of hints a little bit here at interestingly enough, at dollar weakness and cable strength. And so I find that quite interesting. We're still stuck within this range. Not really tradable from that perspective, but it gives us a little bit of clues about the US dollar. Then, if we move across and have a look at gold, let's have a quick broad overview of gold at the moment. It is operating sort of relative to all-time it's operating at all-time highs relative to previous performance, but it still is in this kind of danger zone where it's not quite capable of breaking free of all this resistance. So it's trying to decide what to do, and you can see if you look at the last 5 or 6 candles, they're still stuck within that sort of range, and actually on that daily as well, it's kind of, you could even argue that potentially there's a little bit of an ascending shape that is forming here. So this is something I keep an eye on. I don't think there's anything tradable just yet, but finding some support. Historically, there should be more momentum to the upside. So in other words, the probabilities are at least 55-45 that will break out to the upside. Crude oil is the most interesting one to me at the moment. Crude oil is definitely trending higher. It has a very, very serious level of resistance up here towards the $79 level, but it is very much on its way there. MACD and RSI are nice and bullish, and so for this week, certainly for me, one of the most appealing for day trading purposes is crude oil to the upside. Let's have a very quick scan through the global indices. They're all looking very, very healthy. They are due at some point for a retracement. That's a weekly one. We've got a daily one as well. All of these, I would expect at some point that we'll get a bit of a weekly retracement. Will that kick off this week? In order for that to happen, we'd have to have a very strong or bearish red candle. So we'd have to close lower than we start. We'll see if that's going to be the case. But for the most part, the markets, ladies and gentlemen, are incredibly happy and very bullish and very healthy. Very healthy. How do we know that they're healthy? Well, we know that if we look across at individual stocks, they're all going in different directions. So when it's a bubble, all the stocks are going up or down together because they're not thinking rationally. When they're diversified, so when you have some stocks going down and some going up, that is actually the operation or the behavior of a normal, healthy stock market. That's what should happen. Some stocks should do well, some should do badly. If they're all doing well, it's a bubble. And so that is the case currently. So tech stocks looking very good, but we do ultimately need a bit of a retracement. And so this week, that is something I'll be watching out for. The FTSE, just to summarize here, is just I don't know how to say this nicely, but it is really not a very friendly chart. The term I would usually use is garbage. It's just incredibly choppy and volatile, not appealing for there's no real value to engaging in a market that looks like the way. If we move across and have a look at the German DAX, you can see that's largely going sideways. Looks very nice. Overall, nice and bullish. This is a consolidation, and therefore my expectation is that it will break out to the upside once it has finished consolidating. Let's have one quick look here at Tesla. So the big thing here is that Tesla is still within this downward channel of lower highs, low lows. It's in a downtrend on the monthly, weekly, and daily timeframes. It currently is attempting to come back up to test resistance, but for the moment, it appears as though the future for Tesla is down. We'll have to see. We'd really have to break above this high at 264 for that outlook to change. NVIDIA very much overextended again. This could be the formation potentially of a weekly candle that becomes at a turning point, at least a swing high, and we could have a retracement after that. And very quickly wrapping it up, Amazon, nice and healthy. Again, they could be forming a bit of a red candle, which could lead to a retracement over the coming weeks. Bitcoin itself also looking very nice and bullish. Okay, very nice and bullish. So generally speaking, most of the markets are looking very nice and happy and healthy and bullish. There are plenty of opportunities and strong trends across the board. I will leave you with that. Thank you. Have a great week.